An exceptionally dry summer, rising commodity prices, and nationwide inflation are a few things our next guest manages on a daily basis. Joining us now is David McLennan, Chairman and CEO of Cargill, one of the largest private companies in the nation. David, great to have you with us.
Hey, Melissa, good to be with you. Thanks.
Is inflation transitory in your view?
You know, I don't know that I'm smart enough to know if it's transitory or permanent, but the fact is it's here. And as you just alluded to, we've had a hot and dry summer in many parts of the agricultural belt. We've had disruptions due to supply chain issues due to COVID, but the weather remains a factor. So certainly we're keeping a very careful eye on it.
Do you think that costs come down next year? I mean, when you're modeling out, for instance, the cost of commodities, what are you assuming?
We think it's relatively steady from here, but of course, the soybean growing season is not over. I think the corn crop looks pretty good, certainly not as abundant as it has been in the last couple of years. We've had some windfall crops, some very significant and successful crops in the last couple of years, but because of the drought, it's going to be a little tougher this year, but it remains to be seen. But right now, prices will probably could hold steady in the next couple of months or to the year, to your question. But, you know, there's a lot that can change. Again, continued COVID outbreaks, continued disruptions in the supply chain, and weather is always a factor when it comes to agricultural production.
I wanted to ask you about the big deal that you announced just about a week ago, the JV agreement with Continental Grain to take over Sanderson Farms, the third largest producer of poultry in the nation. It's one of Cargill's largest transactions in its history, Dave. And I wanted to ask you what that means, do you think, for chicken prices? It seems that there's been more of an awareness of rising prices these days. There was a New York Times piece on the 17th saying break up big chicken because prices have gone up by as much as 30% in some cases because of the consolidation that has gone on in the industry over time. What can you tell us about prices and whether or not they are higher because there are fewer players?
Well, I saw the article that you're referring to, and the fact is that we've made a commitment to the protein industry around the world. We've been in the chicken business outside the U.S. for many, many years, and we were in the chicken business in the U.S. back in the 1990s, and we think that this is an important source of protein. We think that consumers want choice. They want to have the choice amongst whether it's chicken, turkey, fish, or beef, and it's a diversification of our business. Relative to the consolidation of the industry or that perspective that was expressed in the New York Times, we think that the fact is when you have large players who can operate at scale, it means we can help keep prices lower for consumers. So it's important. You can't have a bunch of small players delivering such an important food source to the nation's consumers. You have to have larger companies that can do it cheaply and can keep costs down. So our view is that we can be a player with Continental Grain, with Wayne and Sanderson Farms combined to help keep prices lower.
Shepard Smith here. Thanks for watching CNBC on YouTube.